Greetings traders, Jason here with swinghigh.com. It is Wednesday, October 21st, and as expected, we're seeing a choppy week in the markets. The SPY opened kind of flat and popped up to the 110 area again, tested it as resistance. It's proving to be major resistance as expected, and now we're pulling back from that resistance area, which is also not uncommon. How far we pull back, we'll see when we can mark our next swing low, and we'll go from there. Let's take a quick walk around the internals here. The tick has spent most of the day in bullish territory. Very recently, around 11 o'clock, it started to get bearish, and then recently it's been bearish again. The trend spent most of the day bullish under 0.8. Now it's back to neutral, and that's a little concerning to see the trend rising and the tick falling. Let's look at the VIX. The VIX is bleeding out very nicely, down another 3% today. If you recall, it was down 3% yesterday, which is strange on a down day, but down another 3% today, which is good. Volatility bleeding out of this market will provide room for some upside. On the daily chart, we're still forming this beautiful high base formation after a gap up last week. Still testing this 110 area. It's proving to be major resistance. Only time will tell how long it will take to test away that resistance. And you never know. Recently, high bases have been failing. High base formations like this are normally bullish. They statistically more often break out to the upside than to the downside. But if you'll notice, recently in this up leg here, we had a high base here that failed. We had a little bit of a high base here and then a little bit of a failure. Another little high base, little failure. Another high base, failure. Now, that's abnormal to see, but that says that this could be a point where we are rolling over here. But statistically, you got to play the odds, and high bases normally do break out to the upside. So, on a close above 110 on a daily, we do have to close above it for it to be more significant. On convincing volume, that would be the start of a breakout, which would be very bullish. Also, yesterday we did fall out of the rising wedge again. That rising wedge is proving to be less and less relevant as we chop away this bottom line here. But we do have a bigger rising wedge that we are still in the context of. If we go all the way back here to our March lows, so we are still in that rising wedge. We'll see how this high base unfolds. Earnings season is causing a little bit of sideways chop in the markets. It's not uncommon and not unexpected. As long as we hold up in this high base formation or break out to the upside, I will still be long with my UPRO position, the triple leveraged ETF that tracks the spiders, or SPY, which tracks the S&P 500 index. So the internals are following the market well. They are corroborating the move today, and keep in mind we are in a high base, and we'll see how the rest of the day unfolds. Check back later this evening for my post-market analysis. Good luck the rest of the day, and trade smart. Thanks for being a part of swinghigh.com, and I'll talk to you later.